Good evening, everybody. It's Scott Gillum with the Stock and Options Shadow Trader short video for today, the 15th of August. My eyes are going towards the consumer, and actually they're going towards the leisure travel area. So I'd like to bring to your attention Royal Caribbean, Romeo Charlie Lima. This is beginning to look very interesting. In fact, that the cruise lines are starting to potentially wind down their big move that they had over the summer as we go into the fall. Now, Royal Caribbean, though, seems to be the best operator on a fundamental basis. Here, I'll show you something that I put together. Royal Caribbean. Last year in 2023, they did $6.77. This year, they're expected to do $11.50 per share. Well, that's a nice 70% increase in revenues. But if you note, their 2025 revenue expectation is drastically down. So, let's go back to the technicals. Have they run too far? In my opinion, yes. Is there a play that we can use? In my opinion, yes. As we go into the fall section of this stock market, I'm looking to sell credit above where they've been before and above where they dropped to, primarily because of this August 5th flush that the overall market did. And if you note, that overall flush on Royal Caribbean came down to the 200 simple moving average. Now, their long-term trend line is about to be touched on the way up, but if I go out to this September time frame that I'm looking to sell credit on, that's where that trend line starts to get us into a little bit of concern. All right, so if I sell credit down here and I sell credit above here, they can't get me on both sides. So let's take a look at the makeup of the trade. First of all, I'm going to look at the September 20 time frame, monthly option expiration, 36 days out. I'm looking at the 45 and the 145 and the 170. Let's go back to the chart. 145. That's around just a little bit higher than where that recovery day after the 5th of August was at, and the 170 is just at that trend line. So if I take a look at this trade and I sell the 145s for $1.96, I don't want unlimited risk, so I'll go out and buy the 140s for $1.24. That gets me about 65 cents. About 70 cents, pardon me. On the other side of the coin, I'll sell the 170s and then cap that risk off with the 175s. Again, sell the 170s for about $1.72 and buy that risk mitigating 175 for around 80 cents. So again, that's about $1 on this side, about 75 cents or 50 cents on the put side. I will gain $1.55 of credit for that trade. Now, all well and good. Market makers are looking for about a $10 move up or down from current price. Current price being at 157. Let's go back to the chart. So we sit here 157 plus 10. That's 167. That's underneath that short call. 157 minus 10, that puts me at 146. That's above that short put. So I should be good to go with a high probability of success, selling credit above and selling credit below. And as we look at the curve, here's the makeup of it. I've got a break-even point at 143 and 75 or 143.50 on the downside. And on the upside, I've got a break-even point at 171.50. those are outside of those market maker expected moves. And when I take a look at this overall trade has got a 75% chance that I keep any of the money. So here's the trade. Buy to open the 140 put, sell to open the 145. Buy to open the 175 call, sell to open the 170 call. That gets me approximately $1 and let's say $1.60 right now. If I have $5 of risk minus my credit of $1.60, I have $340 maximum risk. Well, that works out to about a 42% return in 30 days. Primary exit on this trade is for this to expire worthless. We stay within that boundary level of that 170 and that 145. That's all well and good, but I need to have a plan if things start to get tighter. So here's the plan. Second primary exit. If I can recapture half of my money, or let's say reduce my risk by half, and close this off for around 70 to 75 cents in 15 days, my return on my risk has more than exceeded the 30-day time frame. So it's more than the 42% return on risk. So primary risk is for this to expire worthless. Second exit point would be to take this trade off in around 15 days for half of that credit. Also, if we start to encroach on either the upside or the downside, I have the ability to close off that winning side. Let's say we start to move up to the 170 level, 165. I can close off my bull put for almost maximum profit and then manage the bear call. On the other side, if we start to roll back over, I can close off my bear call and manage the trade with just the bull put. So there you have it. Royal Caribbean, selling credit above, selling credit below, called an iron condor.
Hi there, this is Scott Yellow from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.